Secretary, always good to see you. Thank you for your service.
I'm not Mr. Chairman yet, but I. You were speaking that, Chairman.
Yeah. You know, I read parts of this proposal, and I almost imagined a couple of folks sitting around at the White House drinking Diet Cokes, and especially when a lot of the heavy lifting wasn't addressed, the GSEs and CFTC and the SEC, only portions were addressed, and I think numbers of people on both sides of the aisle have alluded to that, and yet I saw that the Fed was a clear winner in this. I think everybody on this panel would agree with that. This administration has received accolades in some quarters for, trying to make sure there's no conflicts of interest and lobbyists can't be hired and all that. I wonder if it would make sense, since there'll be a lot of interaction with you guys, and obviously there'll be some arm twisting and consultations taking place, I'm sure. Would it make sense for the President to, in writing, tell all of us that no one involved in creating this at the White House or Cabinet will be appointed as Fed Secretary or Fed Chairman?
No, I don't think that would be appropriate. No, nor do I think it would be necessary.
It's interesting to look at the new.
I think you expected that answer. I think you expected that answer, Senator.
I actually expected that. I don't know. I think it would be good for us to know as we move through that none of the folks involved in helping create these new powers under the Fed are potential Fed chairman. I think that would be good to know, but I'll leave that to y'all. I think let me just move on. The resolution authority. You and I have talked about this since the very first time you came up here, and it seems to me that what you're doing is in essence making TARP exist in perpetuity. I know that you have the authority to actually cause organizations to not exist, but you also hold upon yourself the ability to do exactly what is happening in TARP today. And I think most of us don't like that much. I think most of us would like to see that end. I know you were asked earlier whether you were going to extend it, and I just wonder, the ad hoc nature of what has occurred, I think, is what has created much of the instability, and yet you resume under yourself, under this resolution of power, the ability to do exactly what is taking place under TARP. And I'm just wondering why that makes much sense and not going ahead and having something that's very clear-cut. Some people have talked about a special bankruptcy court. Some people talked about the FDIC resolving, but you in essence are reserving to yourself the ability to cause TARP to go on into the future.
No, sir, I know you said that many times, but it's not true, and we wouldn't do that. TARP is temporary. It will be temporary. It will, fortunately, go out of existence when the statute expires, and maybe before that. What we're proposing is to take this model that the FDIC has presided over, its existing checks and balances, its existing authorities, designed for a different financial system than we have today, and adapt it to bank holding companies and those complex institutions that present similar risks to banks. So we're doing the essentially pragmatic conservative thing in taking a model that exists, has a lot of experience, has good checks and balances, and adapting to the financial system we face today. We are not proposing to sustain some indefinite capacity to do what Congress authorized on a temporary basis, appropriately so, under the TARP, and I would share your concerns, any concerns people express with that kind of authority.
So you would work with us to make sure that you didn't have the ability just to conserve into the future and make ad hoc decisions at Treasury regarding entities that were deemed to fail.
Well, again, Senator, the way the FDIC mechanism works today, and we're preserving that basic balance, any action would require a vote by a majority of the board of the FDIC, a majority of the governors of the Board of Governors of the Federal Reserve System, and the concurrence of the Secretary of the Treasury, and institutions that have banks at their center. we're preserving that basic balance. There is a carefully designed set of statutory criteria for exercising that authority, which we think fundamentally we can replicate in this context. So I think that has has an established record, good, well understood checks and balances, a lot of merit in replicating that basic structure.
So I know my time is up, and I know we're going to be talking about this a lot more. The one thing that was interesting, I looked at, the 13.3 issue's been raised a couple of times, and that jumped out. It is interesting, and I think a lot of people have asked sort of the questions about priorities. The Fed, a lot of people think, and I'm not necessarily in every one of these camps, but some people think that the Fed earlier on failed with monetary policy and helped create a policy bubble. Some people think the Fed actually failed somewhat supervisorily, and yet they did a pretty good job responding quickly to an emergency. And what y'all have done here is actually sort of hamstrung them as it relates to dealing with an emergency, but yet on the other hand, given them even greater supervisory authority. So it's just an interesting way that y'all have gone about this, and very different than what history has shown to be good practices at the Fed itself.
I agree with some of what you said, and I particularly agree that the Fed, I think, in being able to move as quickly as it did, played a decisive role in avoiding a much more catastrophic outcome for the financial system and the economy. And I think we need to preserve that authority. Now, what 13.3 does is to give the Fed the ability to lend to institutions it does not supervise, as I said. We are trying to fix that basic imbalance between institutions that play a critical role in markets and those that come under the Fed's basic supervision. By changing the boundaries of that authority, we will reduce the risk in the future, particularly if you give us resolution authority, to reduce the risk the Fed has to use 13.3 in the future to lend to institutions outside that basic framework of protection. But as I said, even in this crisis, where the Fed acted, I think, very swiftly and effectively to help contain the damage, where it used 13.3 in particular cases with individual institutions, it did ask for the explicit concurrence of the Secretary of the Treasury in recognition, again, of the potential losses to the taxpayer that were inherent in those judgments. And I think that was appropriate for the Fed to do. As you know, I was closely involved in that decision, and I think that those decisions, and I think that would be appropriate to put in place in the future. And I do not believe, but I think this is an important concern, that would constrain the Fed's ability in the future. Now, it is necessary, though, to tighten up the responsibility and authority the Fed has now for those core institutions, for payment systems because of the risks they present, and for capital. I think in those three areas, the Fed's authority is too qualified now. It's got responsibility without clear authority and accountability, and I think that's worth fixing. Basic pragmatic case for fixing that.